So in case you didn't notice yet, there are not 1,000 currency pairs you can actively trade every single day. There's only a couple of them. And eventually, if you trade enough, you're going to come across correlated currency pairs. Now the question is, how do you deal with them? What's up, this is Trade Nation. Welcome back to this new video. And today I want to explore the topic of how to trade correlated currency pairs. Those pairs that move with each other. And there's plenty of them, so we need to know how to cover those. And this question comes from one of my subscribers on this channel. If you're not subscribed yet, click that subscribe button down below and let's get to the topic. So there are basically three ways to deal with correlated currency pairs. Way number 3 is my favorite, but let me just go through all of them. The very first way is to do exactly like you did before. So whatever trade you have, whatever risk you have, you place the same risk on correlated currency pairs, no matter what happens. And that means if you were to take 2 trades on 2 correlated currency pairs, you would put the same amount of risk, and risk basically the double because the 2 trades are correlated. That's fine. If you computed your risk of ruin, and if you know that you have an edge, you shouldn't have any problem. It should be totally fine. Except that you risk intensifying your losses, but also intensifying your wins, which means if you lose more. If you win more. Probably. Even though currency pairs are correlated, it doesn't mean that they're going to always act the exact same way. The second way of dealing with those correlated currency pairs is to try to spot which setup is the most accurate. If you see the exact same setup on 2 currency pairs, try to ask yourself which one has most chance of being valid, of being a winning trade. And this you can look at the strength of the setup by looking at the strength of the currency pair. If, for example, you had the exact same long setup on USD SJD, which is USD Singapore dollar, and USD CAD. Both currency pairs have the exact same base, which is USD. Now you need to look at the difference between Singapore dollar and Canadian dollar to see which one is strongest. Since you want to take a long trade, you would have to look at which one is the weakest between those 2 currency pairs. If you plot a chart of CAD SJD, which is Canadian dollar, Singapore dollar, and you see an uptrend, it's a sign that Singapore dollar is the weakest, which means that this currency would be the one to trade. You would then trade USD Singapore dollar, and that will give you a stronger trade. Now, if you want to take a short trade on both of those currency pairs, and you plot the chart of CAD SJD once again with an uptrend, you would then short USD CAD because the Canadian dollar is most likely to go up, which means that the US dollar is likely to go down. Technically, okay, that's the second possibility. And this one is kind of complicated sometimes to figure out. You kind of have to look at chart, you have to draw some things on the whiteboard just to give you this kind of idea of what is happening. It might be a little bit tricky. And then there's this third way, which is my favorite way, the way that I use pretty much all the time. It's simply to split the risk. If you have 2 trades on 2 correlated currency pairs, you simply split your risk. If you risk 1% per trade usually, you would risk 0.5 and 0.5 on both trades. That allows you to take both trades and at the same time take all of your setup, but you ensure that you won't have too big of a loss if you lose both trades. At the same time, your wins will be smaller, but it's part of the game. So I hope this answered the question. If you have any other questions, just comment below, let me know. Also give a like to this video if you liked it, and I'll see you guys tomorrow. Ciao.